This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the datasets, the earnings, and doing a quick technical analysis over the SPY for February 24th, 2026. And I do apologize for missing the stream this morning. I was just far too exhausted from making last night's video. I still highly suggest watching it. It's about an hour long. It goes heavily into detail of what I'm expecting over the next week, 2 weeks. Anyway, with that said, I will be streaming tomorrow in the morning, and let's go ahead and jump straight into the data. Now, today is a very important data day. Well, I say important, but that's mainly because we have a lot of data. The main important data day this week is primarily Friday. However, this is kind of the secondary big data day this week. We have the ADP weekly employment change at 8:15 a.m. Again, I expect cool data sets out of that. We've been seeing the ADP barely being above the neutral range, which some people might misunderstand what I mean by neutral range. That neutral range is basically at that zero. So this is just barely above that zero, and sometimes we've been seeing it actually below that 0 point. So it hasn't been where it needs to be, which is again closer to that 40 to 50,000 a week. Now at 9 a.m., we have Feds Bostic and Waller speaking. We also have the housing price index. I don't really have too much concern about the HPI. Um, if we get a very large print or a very, weak print from it, then, that'll be something we can go over. If it's going to affect the market, you'll see it affect the treasuries first and foremost. So, we'll take a look at the treasuries during that time, but again, I really don't expect a whole lot from that. The main data set today is the CB consumer confidence. I did briefly talk about it in yesterday's video, but this has been at a recession level for months and months and months. Now, again, it is a soft data set, meaning it's opinion based. It's not based on hard data like um the auto project data and stuff like that. So, it is opinion based. However, again, each time we've seen this data set at this low in remaining this low in such a trend, it generally leads to a recession. And I'm not saying this data set leads to a recession, but generally we see this happen prior to a recession or sometimes even during a recession. So again, this is still very weak, and the forecast is expecting to see this higher. I don't really expect that at all. I expect it to be very close to this 84 to 85 range. After that, we have the GDP now at 11:30 a.m. I don't really have too much to weigh in on that. It's been pulling down pretty much every week now, so will it keep that 3.1%? I'm not sure. We just had the whole tariff ordeal going on, so that has to be priced in. I have no clue about that. So, um, we'll talk about that more as that comes out. I really don't think that's going to affect the market very much. I think out of anything tomorrow, it'll be the CB consumer confidence. Now, we do have the 2-year note auction at 1 p.m. tomorrow. That's generally something I try to pay attention to quite a bit, but I know that treasuries right now are sort of in a buying stance due to a lot of different macro and economic conditions overall. So, um, very likely we see the yield pull downward. All that I would be beyond surprised if we don't. That's all the data for Tuesday. Now we do have President Trump speaking much later in the evening, um, after the trading session's already over. So whatever he has to say, if it's, fairly significant to the market, it will carry over into Wednesday. Now, again, Wednesday, just like today, doesn't have very much data at all. So, um, you can expect kind of a lot of chop during that session. And again, with the earnings this week, we don't really have anything majorly important on Tuesday. Home Depot's in the morning, which could be significant to the overall consumer market. We do have full solar in the afternoon, lucid, but nothing very, very important. Again, the primary major earnings this week is Nvidia and Salesforce, and that is on Wednesday after the close. So nothing too much for today's session. Really, it's going to be uh, after tomorrow's trading session that we have Nvidia.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's go ahead and turn on the daily time frame and ensure our moving averages and Bollinger Bands are turned on. Now, we've talked about the price action that's been occurring over the last few days, basically almost to the T, and kind of circling back to Thursday, Friday, even, Sunday, when we had the longer video. We talked about how from this sell-off, they would test the 5 mile. From that 5 mile, we had both the upper bounds of the 5 mile tested and the lower bounds of the 5 mile tested. I said that very, very likely we were starting to see the beginning stages of, further bearishness, which means that we will be seeing the 5 mile, 10 mile, and 20 mile pulling underneath the 50 mile. Now, that's very important. And the reason why it's important is because the last time that actually occurred was when we had that major sell-off. And when we saw the 20 mile pull under pull under the 50 mile, we saw the market price pull all the way to the 200 mile and far below that. Okay, now generally when the 20 mile pulls under the 50 mile, it's not a major correction type stance, but the market for the most part is wanting to push upward. And this is something you can look at for the very large majority of spies trading throughout the years is that when you see the 20 mile pull underneath the 50 mile, generally it does not stay there very long, and generally that's showing that there's going to be, major selling. Now, that doesn't always correlate, okay? Some of these larger trends do have that bounce type occurrence where, we see the 20 mile pulling through it. When that session actually occurred, um, technically the market was already starting to buy up back at that point. So that wouldn't have been a major bearish signal. But we were already starting to see other signals that were telling us that the market would start buying up at that point. Um, Let me see if there's another good signal. Right here, kind of the same situation. We started pulling under, and by the time we started pulling under, we already saw the market buying back up. Again, that was something we did track. We did have the lower Bollinger move there. We should have been in longs regardless. Same with that move. Same with this move down here. Now this one's a little different. This one was, again, a very, very major sell-off. Okay. And this looks a lot closer to what we're experiencing currently. And the reason why I say that is because the depth on how far the 20 mile can go here was very, very deep. Okay, and when it hit that 200 mile range, we didn't bounce upward off of it like we generally do. Generally, when we see that 200 mile range hit, bounce upward, bounce upward. This was a bear market. This was the 2022. It's funny that that shows that that's something I was just talking about in the group chat. Um, so as you can see, generally being at that 200 mile range is a bounce. So this was starting to enter that bear market territory. Okay, it did not occur. obviously, we were able to buy out of that dip, and if you were trading with me at the time, we actually timed this dip very, very well. Um, with that said, is that with the 50 MA still going to be pulling upward and holding this weight for quite a long time, because remember, it takes 50 trading sessions for that 50 mod to move to wherever that price action is going to be um by the end of that 50 days. Okay, so if we're going to be pulling upward, then it will take, 50 trading sessions for the 50 mod to pull all the way up there. Same if we start pulling downward, it will take 50 sessions to, hold this weight and slowly start pulling downward. Okay. The reason why I'm saying that this can get very, very bearish here is that we're starting to see major signals of weakness within not just tech, but semiconductors as well. And I'll show that here in just a moment. But we have also been rejecting the upper Bollinger very, very heavily. And generally, when we start to do this, this is when we have some of the largest sell-offs. This happened when we had the sell-off in 2025, when we sold off all the way, from April, or excuse me, from February until April, and that's starting to occur now. Okay, we're starting to have those major upper Bollinger rejections, and not only are we starting to have those upper Bollinger rejections, we're starting to see the 5 or the 20 mile cross down a lot lower. We're starting to see the lower Bollinger expand further to the downside. And again, we're seeing all of this bearishness just starting to occur right when we're getting ready to have the 20 mile cross into the 50 mile range. Um, to me, just based off of, how things look right now, this looks extremely indicative of a push downward all the way to that 200 ball. Okay, and obviously this isn't going to happen over, just 1 or 2 sessions. This is going to be, weeks and weeks of price action. However, it does look very, very close to that. Um, unless again we start seeing a major bounce upward. However, I'm going to show why I don't really think that's going to occur. And we'll circle back to the SPY in terms of structure and everything. But I want to show semiconductors, and then I'm going to circle back to tech. Is that semiconductors on the weekly and daily time frame are heavily extended. Again, when we start getting to either the upper Bollinger or lower Bollinger, generally we do not see the price action pull too far above that range or below that range. Again, using the road analogy, usually you don't pull off the road very far. Usually if you do, you start hitting the bumps on the side and then you pull back on the road. That's how the Bollingers work. In terms of the upper Bollinger and the lower Bollinger, generally your price action wants to stay within these lines. Okay. Yes, we're seeing a little bit of expansion within this upper Bollinger here. However, the downside here is really starting to be within, the actual downside, or, the movement's really starting to be positioned to expand within that downside rather than continue to expand the upside. Can it continue to expand the upside? It can, but it's starting to look like it's wanting to taper out that upside and start to sell off a little bit. Okay, and that's a little bit worrying because semiconductors largely have been keeping us, held on in terms of the SPY and everything for, since the beginning of 2026. And to show that point, we're going to QQQ. QQQ looks absolutely awful right now. It's been pushing into its lower Bollinger multiple times, rejected the upper Bollinger. It's been trading below its 20 mile range for basically over a month now. Without seeing major structure of retrieval here, nothing really looks overly bullish here. We've been seeing rejections of the 20 MA, rejections of the 5 MA, you know, a lot of signals that are still telling us that this wants to push downward further. Now, when we look at the SPY again, if I could pull it up, we see how SPY has really been trading rather in a consolidated range, pretty much across, the board, just flat. Well, if semiconductors have been going upward, tech has been going downward. Well, think about the overall market narrative right now. Is tech going to be the one to gain the weight, or is AI going to be the one to gain the weight? Out of anything, it'd be AI to gain the weight. So tech isn't in a position to start climbing again, really. It's really semiconductors in a position to sell off from where we're at. That's just how I'm seeing it in the grand scheme of things. I could be absolutely incorrect about this, but so far this is what it's looking like to me. Okay. With QQQ being pushed down and continually creating bearish structure to the downside, this is telling me that this downside really does want to start expanding out further, and very, very likely a lot of that weight that has held the SPY up is going to start, evacuating out of, semiconductors, and in correlation with that, also out of the SPY. And that's why I do think that, starting to keep your eyes around that 646 range is really, really going to be crucial. I really do think that a major correction is in store. We have been seeing TLT since the beginning of the year, starting to have major buying to the upside when the narrative has not supported the long end buying in terms of the actual treasury bills themselves. So somebody is buying this out of reducing risk. Okay. Um TLT is not just bought willy-nilly, and I think that anyone who's been trading TLT for a very long time will know that is that this price action can be extremely sticky. It can be extremely, just stuck to a very, very consolidated range for a long period of time. So when we do have large buying like this, it is a signal. It is something we need to pay attention to. Now, we have not been seeing major selling within the HIG or within liquid yet. And this is something I am looking for. I am looking for HIG to start selling. I am looking for liquid to start selling. Those are both instruments that, again, we have not been seeing the selling on, which again has not correlated to a true major selling event going to happen just yet. Now, I want to kind of just cap this off with this image. And I've shown this on Webull and within the group chat many, many times. This is the yen. Okay, this is FXY. This is the 2024 unwinding. This is the selling from early January till April. And this is very likely where I'm expecting us to start seeing the yen, pull back upward. The reason why we see the yen have these major, what's called unwinding events, it's because the Bank of Japan will sell off securities. That's what this buying weight to the upside is. This is selling securities, buying the dollar, selling the dollar, and buying the yen. So the yen has all the strength to gain while during these events, hopefully my DXY chart will show those properly. Let's see. This is when we had that unwinding. So we started to pull up towards the end of July. And with that pull up, that's showing that they were getting ready to sell positions and, get into the dollar. And with that dollar starting to drop, that's showing that there's an influx of dollars within the system, meaning that the Bank of Japan is buying yen. They're selling the dollar to buy the yen. Okay, so the dollar will drop, the yen will gain. Okay, and that happened also in 2025. When we had the major selling in the beginning of 2025 all the way till April. We saw the dollar drop all the way down, and it didn't really start regaining weight again until um very, very late April, early May, and then it started to recuperate. But that's just showing you that there's a massive influx of dollars within the system, and that um, you know, during that time we see again the yen gain large amount of weight. So each time the yen pushes down towards this level, the Bank of Japan has to intervene. They have to unwind positions to buy the yen back up to re-strengthen it. It's something that it has been consistently happening now since the yen has been dropping down to the levels it's been dropping down to. Um, this is a major reason why the Bank of Japan has been hiking their interest rates, why they've been trying to get their JGB market going, which is their bond market, so that they can naturally strengthen their currency without having to, consistently and constantly intervene like they've been having to do. Now, they have not been seeing the strength just yet, and again, we're at this crossroads where we see the yen push down to a very, very low level with the buying in TLT, with the rotation out of tech into semiconductors, out of that tech into semiconductors. If I can pull it up because I'm a blind man, that way into semiconductors. We're seeing a lot of that rotation occurring. What's been absolutely flying since the new year? Let's go ahead and look at gold. You know, Since the new year, we had that drop, but ever since that drop, it's been continuing picking upward. Okay. People are repositioning. Okay. They're starting to reposition for a changing market. What have we been seeing out of Bitcoin? Ever since we hit those all-time highs with Bitcoin, again, that was all the way back in October. We've been seeing a major rotation in the market. So, are we going to be seeing a major correction happening pretty soon here? I truly do believe we will. Um, I believe all the signals are really there and that we're just really at the cusp of the beginning of starting to see truly those signals kick off. Um, I could be absolutely incorrect. I know that some people think that NVIDIA is going to do extremely, extremely good with their earnings and is going to basically save the market. Can that occur? Yes, it can. We've seen NVIDIA do that in the past, so we definitely can't count that out. But overall, I'm seeing major weakness starting to pick up, okay? And not only is it major weakness, it's very, very consistent and continuous weakness. And we also see this within our VIX. We see this within our VVIX. Our VVIX has been absolutely blaring, okay, and it's been holding that level for an extremely long period of time. So there's a lot of warnings. There's a really a lot of warning signals going out here that I do think that there's going to be a major unwinding occurring. Um, there's something else I was going to show, but I don't remember right this moment. What have we been seeing since the new year with oil? You know, a lot of weight in oil again. Um, I just think that a major unwind is coming and that we need to really be prepared for it. I'm not seeing all the signals that the market is wanting to break out to the upside and really start pushing upward. I could be incorrect about that, but um since we've been continuously staying within this major consolidation range, the pattern has been holding the exact same. And now we're seeing that pattern breaking down. I talked about this liquidity very, very detailed yesterday, so highly suggest watching that. But we're not seeing this upper liquidity taken so far. And if we don't see that taken, if we see this rejected further, it is alluding to pushing into this very, very dark red and deep 646 range. And that would create a massive inverse cup to the downside. And from there, we would be in a full-blown bear market. Okay. The 5 mall would be pulling towards the 200 mall. We'd be seeing the 10 mall pulling downward, very below the 50 mall. We'd be seeing the 20 mall pulling downward. We'd be seeing the 50 mall starting to pull downward, and all of those moving averages starting to pull towards that 200 mall range. So, very, very concerning. We're seeing a lot of signals here that are really telling us that, again, I believe a major correction can be coming here. I know this is kind of a big change from 2 weeks ago where I saw a lot of potential in that bullish upside. However, with this continuous rejection of that upper Bollinger, um, continuous rejection of that upper side range, and continuously pushing deeper and deeper and deeper into this red range, um, it's telling me that, along with all those other rotations and everything we're seeing, that very, very likely this is wanting to basically drain semiconductors very soon here and have a major sell-off. That's just what I'm seeing. Again, I can be wrong. I'm absolutely willing to be wrong, but I have not been seeing bullish structure. All the previous bullish structure that we were looking at has all been invalidated. Um, and everything has just been looking extremely, extremely weak, and I have not been seeing the major buying to the upside. So that's the technical analysis for today. Um, Again, kind of don't expect a whole lot out of the next two sessions. We do have important data today with the CB consumer confidence, but overall, we really don't have a whole lot until Friday's PCI data and also NVIDIA's earnings on Wednesdays after hours. So, with that said, thank you for watching. As always, I appreciate each and every one of you. Um, Let's have a great trading session tomorrow. I will be live streaming in the morning. I am making sure to get plenty of sleep tonight in order to do that. So I look forward to seeing you all there. And yeah, I will talk to you in the next video. Thank you for watching. Take care, and I will talk to you in the next one.